GM friends, thanks for joining DeFi-Logic Symposium Sunday, every Sunday at 1 p.m. Mountain Time. As a member of the DeFi-Logic server, you can join our call every week and discuss in real time. Link is in the description below. DeFi-Logic is the crypto think tank for better decisions. In today's community call, we'll review daily dose reports for the previous week, starting with waddling into Web3, the Pudgy Penguins phenomenon for NiFTy Tuesday, a closer look at the Injective protocol and the INJ token for MMA Monday, WWF Wednesday, and Token Audit Thursday, the evolving narrative of cryptocurrency, SEC's influence and bias, traditional versus crypto regulation and public discourse and blockchain potential for FA Friday, and finally, SPX and DXY for stock and legacy market Saturday. And let's get started. I'll bring Bam up here for the overview on Pudgy Penguins.
Right. Thank you, Christine. Thanks for hanging in there with us, everybody. Welcome to another wonderful week of NiFTy Tuesday, waddling in with some penguins this week. So I'm sure, even if you don't know the name Pudgy Penguins, you probably do know the name Pudgy Penguins. But yeah, we're waddling in to a wacky song. So yeah, you might have even just seen these GIFs of Pudgy Penguins, little fat, chunky, cute penguins. They have a lot of a pretty impressive and remarkable marketing campaign. So let me share my screen just to give you a little glimpse of what we're talking about. So we have they have a really great page, actually. I'll start with the pros. Their marketing is off the charts. Their designs are great. The project started with kind of like a failed attempt at an NFT project, and then Luca Netz took it over, and because he saw the possibilities with this project, and he's turned it into and really utilized the intellectual property potential. So with a lot of NFT projects, we were talking about this, Christine and Pepe and I, we were talking about we should probably, and actually Sloth, we could probably, NFT projects in different categories now, because, you have some that actually, they're NFTs you stake, you get all sorts of different rewards like Mad Skulls and Chicken, Bad Bunnies. You have different types of NFTs. You have the actual characters of the NFTs themselves, and then you have land, different interactability, which are probably my favorite, because when you gamify something, it makes it that much more fun. And engagement is really important, I think, in the value of a project. PFPs are cool, but what's cooler is doing, interactive PFPs that are not just pictures, profile pictures, but can actually do things and interact with other parts of a game, so that you're not just having this huge value proposition on the art, and then, it's what you do with it that really creates the value. So, we did Bored Ape Yacht Club, and this is a similar thing. Like Pudgy Penguins, it's super popular now. You're seeing it hyped up online. The breaking news over the last couple of weeks was they're in Walmart. They're in, all these stores across the world now. Some big Toys R Us stores equivalent to Toys R Us in England. So to be honest, on the face of this, it looks like an epic project that's really great, and people are making tons of money on it and stuff. And the project itself is probably banking hard. I mean, they've made $400 million to date, and that was pre the Walmart launch. So these toys range, they launch with their toys, their plushies, different, they have QR codes where you can get a unique toy in these igloos and stuff. And, they have them on these racks. And then you can possibly get a golden ticket to win traits for a Pudgy Penguin. You don't get a Pudgy Penguin. They might have one where you do win a Pudgy Penguin, but where you can interact with their metaverse, which is pretty cool. But again, I don't see how this value is being transferred back to the actual holders. This is something that we were talking about. Intellectual property is great unless you're not big on making the use of your NFT to start a company. So I haven't been able to find anything where they actually earn rewards through staking. Christine and I, we looked through the Discord, and unless you're a holder, you can't really get access. So again, like we're working with limited information. It's always different when you're in the project yourself too. So I could be wrong on some things, but I mean, look at this, like 400 plus million in digital collectible sales. So their marketing is super remarkable, honestly. 900K plus Instagram followers and toys in over 2,000 Walmart stores. So it's not just like a soft launch. So people are saying like this is a huge success for the NFT community, but what I'm seeing, they have these posts where people are like sweeping these Walmarts of these toys, but that's just the holders like pouring more money into the project. So I don't know how many of these sales are really like organic, or if look at this, there's a little video of this guy and he's going sweeping these pudgies, but he's a holder. I'm not sure if these sales are really like organic and how long that's going to last. It seems like they're forcing their brand onto the public instead of it just being like a natural thing that really does take over. How long is the hype going to last, And is there any technology that's groundbreaking or unique to this project that is actually being utilized for the foundation of the actual project? Because, you see some projects and they do well, but they also have an actual project and technical actual development behind the project. And not to say that Pudgy Penguins doesn't, because they are working on a metaverse thing. But it seems like they're just really pushing, hey, the whole pull to this project is you get these cute penguins and you can use it to, do whatever you want with it. Well, license it through them, through Pudgy Penguins. And they have a basic contract where if, they have a basic contract for people who make 500,000 or less, but if you make or are expected to make more than 500K, like with the Walmart deal, I'm sure they're making more than that, then they can rework the terms of the contract, but it's also up to them how they want the contract to be too. So you're expecting them to play fair. I don't know how they actually are behind closed doors in business dealings. So, but, look at this, shopping cart's full, but again, reads Ponzi to me a little bit like, hey, just keep pouring more money into what these people in the project are creating, and this one, I get not too stoked. I get unhyped when I see projects that are just slapping their brand on like anything, Bored Ape Yacht Club. It's cool. It's got tons of recognition. Brand recognition is cool. But, if you were to make a hotel for Bored Ape Yacht Club, that would be cool, But if you're just making a burger shack that's Bored Ape Yacht Club, like where is the theme being transferred? Like where's the connection to burgers or cookies for Pudgy Penguin? I'm being super critical, but it's your money on the line. So again, this is cool, but they didn't do any Pudgy Penguin themed cookies. They did like a lava one that was like, this cookie will make you pudgy kind of thing. I didn't really see the connection. And then they just wrapped it in a graphic design of Pudgy Penguins. So I don't know. It just seems like money grab and money pull to me. I'm not a holder, so I could be wrong. They could be pulling value out of it. If there was more clearly defined value distribution between holders, then I'd be like, oh, this is such a cool project because these people are able to utilize the IP and the few get rich off of the ideas of the community members, and there's this value distribution and revenue share. But I'm not seeing that, and it's cool to see people that are blindly supporting a project that they follow and they seem to really love it. But I just see consumerism, and I don't see them really creating anything that's besides like community value. They have the opportunity to use the connections in the community, which is valuable, but not everybody is like entrepreneurial minded like that. So I think, they're missing a few pieces. If I'm reading this project correctly, I think they could be, implementing some other mechanisms that can really add true value to their holders. So, but again, let's go to the website. Like, I'm being super critical of this project, but again, like, I want to give honest reviews and the things that I see. And, what do we need more of in this world? I don't know, a lot of things, but do we need more like plush toys and, like hoodies and merch and stuff? Like Supreme was cool, but where is that now? Like, kind of a joke. So the toys are really cute. It's something cute, NFT Web3 related. They say that this is a great way to onboard people to Web3, which, it's a step, it's a process, it's a soft onboarding, but I just don't see, the value being returned. And I don't like to see people getting ripped off. And, they've had all these amazing articles written about them, but that's the creators of the company that are getting rich. Like, I'm happy to see people who created or took over a project be successful, but I wonder where the $400+ million. And they said that, they did the plush toys too as a way to, this is their words, so they didn't have to make more NFTs. They were making it seem as though that was like they were doing their community like a favor. And I just don't, what do they do with the two? Like, how much more money do you need to keep a project going? Like $400+ million. They made that much, but yet they needed to create toys to keep the project going. There's something, awry that I'm maybe not seeing. But they have done some cool stuff with cross-chain, with their little pudgies and stuff, where they have Polygon and they're on Ethereum, so they have Polygon and transferability through that. So I think they have plans for more growth. Definitely something to see where they go with this project. And they certainly have done an awesome job of marketing, branding, but I would like to see more, more closely connected branding iterations that return value to not just the creators of the idea, but to the respective holders. But, that might not be what their ethos is. So it's just something to be aware of. I mean, it's a cool looking project, and the website's super clean. But yeah, there's just a few things that stick out to me as something that I wouldn't want to really invest in at this point. Plus, it's not just, they're not like, a couple $100 for an NFT. There's $5,500, maybe $6K for a Pudgy Penguin off the floor. And what do you really get for that? The opportunity to network, where you could connect with these people through Twitter anyway, most of the time. I think community is important, but it can also be like, whatever you want the utility to be is what it is, which leaves the door too wide open, but that's just me. So anyway, that's our report for this week. We're going to go in depth another week to really discuss this and the is it worth it next week. So I did a little bit of next week with this week, but yeah, can't keep the truth out. So
I think that's great, Bam, you covering this week, and kind of as we looked through it, it's not cheap to get into the project. So having that critical eye, I do agree with you. Their branding and marketing is really top notch. But I think that's a big reason why they are successful. I don't really understand how a stuffy is a bridge to Web3 platforms. We've looked at other projects like Bad Bunnies, where they have an in real life game and then they also have a digital game. Something like that to me makes a little bit more sense than a stuffed animal. But I do have a little concern. They're going out and sweeping the Walmart, so that's more investors' money into the project, just flowing into the project. But for what do they get out of it as an investor, or spending $1,000 on stuffies? I'm not too sure as well. So I'm looking forward to your write-up next week, and it looks like Pepe's up here and probably has something as well.
To build off of what Bam is saying, I think he's onto something, and just to more clearly communicate the penguin Ponzi that I speculate is going on. It's always hard to tell when things like this are going on, but it's, with the marketing push that they're doing, and it's you were showing on Twitter, and I've seen on Twitter where it's, I'm here filling up my shopping cart and buying all the plushies and stuff. It's like, all right, let's think about that realistically, what's going on. So the way that I would do this, if I was going to run a Ponzi scheme for an NFT project, I would, sell it out. And then once we don't have any utility, and because we're dumb and we only understand marketing, I would just be like, all right, guys, we're going to take a bunch of the ETH, cash it out. And with that money, we're going to create these projects. Then to create the illusion of demand, We're going to go buy it all out from Walmart and then go donate it to, holidays are coming up. Go donate it to like children's shelters, this, that, and the other, so that it's out there in the world. And then cross our fingers and let's hope that people, brand recognition and exposure to the marketplace, it's going to pump our NFT floor and we'll make some money because people are going to see it as Beanie Baby 2.0. You know what I mean? They'll start speculating on the limited supply of plushies or something like that, when really the whole thing is just, it's a Ponzi scheme. I mean, I'm not saying that's exactly what's happening. I'm just saying that's most likely what's happening based on market wisdom in the NFT space and crypto in general, I would say.
Yeah. And, it's the same exact thing that you see what happens digitally in the NFT space. You have all these people sweeping the floor. There's all this hype going on. But we talked about this. I said to you last week, I was like, it almost seems as if they don't really want to build through Web3. They just have connections through marketing and physical asset creation. And so they're just utilizing that instead of, building actually on Web3. I mean, they're doing the Pudgy world, which seems cool, like metaverse. Okay, everybody's going to be hopping onto that. They have a finger in that. And, but again, I just see mass consumption and and toxic consumerism. I don't know. I don't like to say toxic this or that, but it's just, I'm seeing the greed and the hype and the, shoving the brand down people's throats or almost forcing the brand recognition. So
I said in the chat, it seems a bit much, $30 for a stuffed animal, but penguin inflation.
I guess they start at $8 or something, but yeah. So, I mean, this was when I saw the cookies, I was like, oh, that's cool. They have all these different penguin or cold themed cookies, but this was it. I'm like, where's the penguin connection? And I was talking in the Discord with Christine and Pepe, and I was like, you know what, like an ice cream, that would make sense. Link up with Ben and Jerry's and do a profit share revenue so that it's not just, they're just going to keep doing these one-off, like limited time things. It's just, we've seen this all before, it's nothing new, but they're making it seem like this is, a canon event when, I don't know how, I don't think it's easy to get product into stores, but, they have connections and it's not the hardest thing to get a product into stores or have we got Jack Butcher posting his cookies. So they got all the high profile people sold because they're probably making money off of it. So
That's what I was wondering as well. Ben and Jerry's is not a bad idea. Probably need to write that one down. So if they use it, they need to pay you more. Perfect. Thank you so much, Ambrosia. I don't think we had anything additional for that. And I look forward to the next write-up that you have on the Pudgy Penguins. And definitely going to be keeping an eye on that project.
Yeah, it's an interesting one to watch. And they are forging a way in the space. And, if they do the ice cream, I want 5% royalties.
I witnessed it, so you got it, Jim. All right, so we're going to move along at a closer look at the Injective protocol and the INJ token for MMA Monday, WWF Wednesday, and Token Audit Thursday. I'll hand it over to you, Pepe.
All right, so this week we ran Injective protocol, which is a pretty diverse or diversified, I would say, ecosystem. It's not just another blockchain. And, I think this project or protocol has a lot of potential. It's just a question if people are going to use it more frequently. I think the next bull run will be an indicator of that personally. But I think it has a lot of offerings that other protocols do not have. They have a few native dApps. They have, their derivatives platform has gasless transactions, which is something that derivatives platforms and perpetual futures platforms across DeFi, including DYDX, are moving toward. I'm not sure if DYDX has the gasless transactions live yet, but that is something that last time I checked, I think it was in alpha or beta testing stage. So, Injective, it's got some power people behind it. And I say that tongue in cheek because the power people are, we could see here, Binance, Pantera, Jump Capital, Mark Cuban. You can see that Mark Cuban-backed blockchain firm. This is as of January of this year. They pumped 150 million into the Web3 initiative, and they are incentivizing founders on Injective as well as Cosmos Network. And Trill can get into a little bit more of the technical side of things, but basically Injective and Cosmos are working hand in some way. They integrate the the name slipped my brain for a moment. But yeah, I mean, I think that derivatives is going to be a big thing. The problem is that, being a US resident and in other jurisdictions, they're not allowed. So how much they're going to make money with that compared to other platforms that also, the many platforms that offer derivatives in the space, that's something to consider. But, they currently have a hackathon. I think it was, where was it? And they have it as a little pop-up when you load the page. Maybe not clicked out of it. Maybe it was one time and done. But I think it was something like $100,000 in prizes for building pretty much anything on Injective. So it's incentivizing the people to build on Injective. The thing that I think is really cool is that it's list transactions on an L2 on the native dApps, and it runs on Ethereum as a side chain. So that's a pretty big deal. The transaction rate is 10,000 transactions per second, which there's faster chains, but I mean, it's significantly faster than Ethereum or other competitors. So, I mean, we don't need a billion transactions per second. I mean, how fast are we really going to be using the blockchain, in my view? Maybe that'll become a bottleneck in the future. But, I mean, it's fast. It does what it needs to do. There's a lot of modular elements that, developers can just quickly launch apps on Injective. And the transaction fees on average, as you can see here, are, less than a penny. So that's going to be a big deal for high transaction volume people in the future. And, just from the business perspective or investment perspective, the fact that, it's an L2 on Ethereum, the fact that it operates that way, I think that a lot of L2s in the future on Ethereum will be the front runners in the space. Yeah, Avalanche Network has and things of that nature that kind of do the same thing in some ways. There's a little bit of crossover in terms of the technology. I wouldn't say completely by any means, but I would say that, the majority of on-chain liquidity, it's just a basic fundamental fact that even if ETH stays slow forever, ETH is a very central point for liquidity. So that liquidity on Ethereum would be more likely to move to L2s on Ethereum than it would be to move to other chains. That's just what I've seen in the space. Maybe that changes in the future, but it doesn't really make any sense in terms of UX to operate differently. So I think that in terms of the interoperability narrative that we're going to see for a very long time, which means that, UX gets better, the user experience in crypto, that's a massive point to consider for these up and coming protocols. How interoperable are they? And what does that mean for what they're building and what they're capable of in the future? I think Injective has a really good shot. The tokenomics are interesting. They have auctions that Trill can get into and explain. Some of the stuff is a little bit over my head. I'm not very technical. I'm more like business and investment side focused and analysis on that. But yeah, I think that's pretty much it for me. So if we want to go over the wallet findings and on-chain data and then get into the technical aspects.
Let me go ahead and share my screen. All right, so we're starting off here. So here's the Injective Hub dashboard. So it shows staking rewards. So we can see they're currently giving out a 15.89% APR for staking. And then if we go check the staking dashboard, you can see the total amount staked. So see there's 125 validators and a total of 44.6 million Injective currently being staked. And then it gives a breakdown of the validators and their staking amounts, commission rate, voting power, uptime. So you can go through that and get more detailed information per validator. And then if we go here to the auction, so basically. This is showing so this is the current auction, which ends on the 25th. So these are basically the total amount of trading fees collected. If we see here between October 11th and the 18th, which was the week prior. So we see there's almost 4,000 injective since that date. And so they started this auction for the fee burning, which is about 60% of the total fees being burnt. They started this mid-December 2021. So this was the first auction that was made. So we can see the amount's a lot higher, and then obviously the price was a lot higher at that time too. And if we look at the price history, so we see here around this time when they implemented the burn mechanism, which was, near the height of the market. And since then it was just down, and then it was pretty much flat for 6 months between June of last year and January of this year. So it's hard to say whether or not it really had an effect on the price, because I mean, just obviously a lot of that was just kind of market dynamics at the time and the entire market tanking. But we do see a uptick here. So starting from January and then just continuing onward up until today has been pretty decent upward trajectory just as far as the price movement. And then if we look at some of the distribution, so for wallet balances, most of the top ones are all exchanges. And then we have this one here, which is the first non-exchange wallet. It's marked as Ensure Private Sale Participant. So if we take a look, so they're holding a total of 136,000 injective, valued at 1.2 million at current price. And then we can also see the balance over time. So we can see, so they bought these back in November 2021 and basically just held the entire time, the same amount of tokens. And then if we take a look at some other holdings here, so we can see mostly USDC, so about almost $14.5 million worth of USDC. The second highest holding is Injective. And then they got about 200 ETH, and then a few other altcoins, ERN, some UOT, DAI, Super, some other ones that I've never heard of. So it seems like they're pretty bullish on Injective, saying how it's their second largest holding, and they haven't sold any since buying almost 2 years ago now. So that's a pretty good sign. And then if we look at Genesis Trading here, so they're holding about the same amount, so 128,000 Injective, valued at almost 1.2 million. And then if we look at their total holding time, so it looks like they've basically been holding since September 2022, and they have not sold any since. Actually, hold on. Let's check out some other holdings real quick. If we go to the wallet profiler, we can see, so they've got about $100 million worth of ETH, and then they got a bunch of Comp, Aave, GRT, Mana, FaxG, BAT, a bunch. So Injective looks like about their 10th largest holding. And yeah, they just have massive amount of altcoins that they're holding. But this is one of the larger funds, Genesis Trading. And then if we look at some other of the wallets here, so we have this one labeled Natasha.eth, and they got 40,000 Injective, $360,000. And then if we look at their balance over time, so they acquired them back in April of this year, so about 6 months prior, and have been holding the entire time. And then if we look at some of their wallet holdings, so it looks like they got Link as their top, Render, Uniswap, a few others, and then we got Injective here at number 6. So yeah, just looking at those few funds and smart money wallets, we can see there's seems to be a lot of positive sentiment for Injective just based on their holding amounts and time of holdings. We can see they're obviously pretty bullish on the project, so that's a pretty good sign for healthy growth longer term. So if Trill wants to go ahead and get into some of the technicals now.
But yeah, the finance protocol, like Pepe stated, it's built from the Cosmos SDK software development kit. So from that, it automatically has inner blockchain IBC called inner blockchain communication, which is what allows the Cosmos SDK, the protocol is built with the SDK to communicate with one another. So from there, Injective has a high bit of compatibility, and it's called both a layer 1 and layer 2 blockchain because, I mean, layer 2s, they, increase the scalability, usability of blockchains. On Ethereum, it's, definitely is a layer 2. I guess on its own, you can refer to it as a layer 1 because, there's dApps and things that are being built on it instead of it, coming out just to be a scalable solution. It was developed to be a solution where developers could build on it. So just you'll see it referred to as both a layer 1 and layer 2, and that's part of the reason. I'll share my screen and I'll show some of the bound information hub, explain some of the features, and all right, this is a little farther than where I wanted to go to, but this is the hub slide that showed earlier. We have all these features here. The auction is interesting because 60% of the fees collected across these are the featured ones. All dApps on Injective are then put into auction, and only the winning bid is burnt. So when Sloth was saying that didn't necessarily impact the token price, it's auction is a deflationary mechanism, as how impactful that deflationary mechanism is. It's hard to say. I mean, because you have the auction pool, winning bid is in comparison to that auction pool. Objective, yeah, insurance feature is a little bit. I mean, it's interesting, but as far as I can see, it's not. It doesn't have full utility yet, just because they don't have direct trading in the Injective Hub. It was approved via governance, but it hasn't been implemented yet. Insurance fund is, as the name insurance is meant to cover liquidated positions. An interesting feature of it is you can underwrite, which would mean you could basically add liquidity to this insurance fund, receive a LP token representing your position, and it's possible for this insurance fund to gain value. So you can earn staking rewards on your position as well as gaining value just in the position that you adding liquidity to. Like I said, as far as it fully being implemented, it's hard to say because there is no direct trading on the platform. But even though it's been approved, I'll go over the featured apps because that's like where the trading actually takes place. It is order book at base, so it follows the first in, first out feature, and Helix is the dApp more developed dApp out of all of these. Mito is in the beta stages, and Astroport, I mean, it just doesn't really seem to offer trading utility, more so just, regular pools and things like that. Mito is a interesting thing about Mito. It's a basically an automated trader. So the team, they propose it as a dApp that, let's say, if you're a less experienced trader, you can follow trends or from smart contracts that potentially, trading, as the makers say, using high level algorithms as far as the, how to say it, the, how good these algorithms are. It's hard to say. This app is in its beta stages, but that's an interesting feature. And there's also more dApps being built. There's Frontrunner, which is like actually like iOS and Android to sports bet. But yeah, so as far as Injective as a whole, I mean, it's definitely a robust platform. And it's not only the team that has on the platform, like they have outside parties, that are coming and developing on there. And to touch on the point of no gas or no network fees, or not network fees, but no gas fees. It doesn't have any gas fees, but they do have something called maker and taker fees, which directly, or as the name suggests, they're part of the maker is the market maker fees, and then they eventually implemented something called negative maker fees. As far as like how that would be calculated, it's to offset the maker and taker fees. They do have a whole chart that will, explains how that's calculated against the already maker and taker fees. But yeah, it's one that's constantly being built on, and just would like to see that they actually do implement trading on the hub, because that will definitely, the hub is the first thing you see on Injective. So like Pepe stated, there's a lot of, as far as like perpetual trading within the US, there's stopgaps. I mean, I'm not on a US network right now, which is why I'm able to see this. Otherwise, this would say this is not available in your country. But Injective as a whole, I mean, the team has built a pretty robust platform, and with the backing, there's been a development on the platform. It's, starts off as a pretty scale wide this platform, and from there it has finance being built onto it. So it's, a pretty scalable, open finance protocol. With the user pool of Ethereum automatically being IBC compatible, it's, it just allows it to be used by some of the beginners in crypto. They don't have to go through too many loopholes to try and use the network. But that's really all I can top of my head. I mean, if there's definitely any questions as far as on the technical side, I can go over that.
I think the one thing I want to say as a final point to wrap up is we talked about the burn mechanism. And I think obviously, just based on the numbers that I pulled up, it's not affecting the supply that much. But that also might be on purpose. So on the burn mechanism, right? We were talking about the burn mechanism and stuff like that. And I think it might be a little bit deeper. In one sense, I know it is a little bit deeper, but in the second sense, I think you'd have to do like a whole bunch of research just on that to figure out what the whole idea behind the burn mechanism really is, because there's like a big meme where, especially in crypto, people are like, inflation is bad. Inflation as money is not bad. It's the fact that uncontrolled inflation is bad. So controlled inflation is ideal, and especially using a protocol or a chain like Injective, the utility of the coin should act like money. So by having this deflationary mechanism over time, I think it might be on purpose that it's not eliminating a significant amount of supply, but in the long run, it might impact the token itself. I don't know if that makes sense or not. Hopefully it does. I think having a small deflationary mechanism in place is a good thing. And I guess the point of me saying this is, don't look at the fact that it's not really doing anything. Yeah. Right now it's not. You know what I mean? But if this is a long-term project over 10 years or so, it will likely have an impact that's slow and calculated over time. You see what I mean? And seems like something like this could be adjusted with DAO proposals and things like that. So just understanding money and mechanisms to make money work effectively, you don't want to burn half the supply. We've already seen that with things. I mean, Strong Block is the greatest example. If people weren't around for Strong Block, you should definitely go look back and see how many things they got wrong and what they didn't calculate for, because they burned like 95% of the supply, and then it became a money problem in the system that they couldn't pay out tokens anymore because they didn't have any tokens to pay out. You know what I mean? So you don't want to do that, is what I'm saying, very simply stated. So understanding how money works, and that in some sense, yes, it's a commodity technically, but like realistically, it's a form of money that you're using within the ecosystem that is the DApp store, right? Or it's like the app in the app store, right? So if you could say Ethereum is the Apple App Store, and then the dApps that are on top of it are the applications that you can buy and utilize in the system type thing. That's pretty much all I got.
Yeah, I mean, I can agree to that. It's not like it necessarily has to burn. Yeah, it doesn't have to be a one-to-one burn, because I mean that would be crazy if you, I mean, literally, like you can run into a problem as far as like giving rewards if you build as much as you created. And as far as, yeah, the direct impact, it's hard to say because it was like, a rough time when they did implement the burn mechanism. But like Sloth showed, since January, which is still, I mean, a rough time for crypto, but dApps have still continued to build on there. So it does show from just the investor side with, people that invested 2 years ago that's still holding and dApps that are, building onto it to this day. And the fact, they did think to implement that mechanism, it does show the team does take into consideration the actual growth of the project. It's not just like a short-term meme, like they do plan for it to be around for some time.
Excellent weekly thing, guys. Thank you, Pepe, Sloth, and Trill for your write-up this week, or your write-ups, I should say, this week on Injective. It seems like they are ticking off some boxes that is good to see. And rolling into FA Friday, I'll bring up Pepe and O'Breezy for their write-up covering the evolving narrative of cryptocurrency, SEC's influence and bias, traditional versus crypto regulation and public discourse, and blockchain potential. So I'll hand it over to you two.
Hi, so this week we did a write-up on a prominent figure and some of the tweets that he's been sharing, some of the things he's been saying online. I think the biggest things is he is claiming, like a true politician, never let a tragedy go to waste. Immediately following, or almost immediately following, the Hamas attack, he pointed out how Hamas received funding from, cryptocurrency. What he forgot to mention, whether on purpose or pushing it, there are traditional banks that are actually freezing accounts as well. Every issue that he's pointing out with crypto, there is a traditional bank counterpart that has done as much, if not worse. But he's not talking about the traditional banking structure. And at the end of the day, when you push back on what he's saying, he basically emphasizes the person that he's talking to or arguing with. Tells them to shut the fuck up. Says, they have the mental capacity of a 5-year-old. These are the people. He was a founding member and used to be the chief for the FEC, or the SEC's IT enforcement division. So he is a prominent figure. He has contributed to the policies that are affecting crypto today. And these are the types of people that the space has to fight against.
Yeah, I agree. And I was trying to show up on my screen because I got blocked by this guy with my personal account, which I take as a victory. And I actually was blocked because this dude was putting, let me see if I'll find an example here. Nah, I don't see it. Maybe he stopped after a while because I wasn't the only one calling him out. There was even people that were like, I like you and a lot of the things that you're saying, but you have to argue, be intellectually honest when you're arguing or discussing. They actually said that. But me being me, and it's Twitter, I'm just like, bro responds to legitimate criticism with copy pasta. And it wasn't even on point. Like the dude, maybe we could find it and I could put it on the recording for YouTube on Symposium Sunday. But there was some guy that was like pointing out, he's like, I didn't get past the second sentence where he said crypto is untraceable. And then this dude, John Reed Stark, right? And you can see what O'Breezy was saying. He's unbelievably, this guy's a senior lecturing fellow at Duke University School of Law. So if anybody wants to go to law school, you got a shot. This is the type of guy that you're going to have to argue against in court. But he's former Office of Internet Enforcement. So anyway, this guy, the crypto guy, was like, I didn't read after, crypto is untraceable. And this guy's not true. And then puts this whole copy pasta that like is just a boilerplate text in response to that guy. And it's just like, dude, like you're not even responding to people honestly. But I mean, you can see here to O'Breezy's point, it's crypto terrorism and Hamas, right? This is a shorter one, right? But he's like, articulate, blah, blah, blah. Okay, yeah, whatever, dude. But we're not going to be excited to give the industry the benefit of the doubt. Benefit of the doubt, $2 trillion of illicit capitals from criminals, pirates, and even terrorists makes its way into financial institutions annually. annually. Okay, hopefully that sinks in. This is an article from The Atlantic in 2015. They break it down further. But it's like, dude, are you serious right now? Like, it's just, like you said, O'Breezy. I mean, it's just so intellectually dishonest. Look, this guy even says himself, the link between crypto and terrorism is in the billions. Billions is a lot less than 2 trillion. Okay? Like, it's just such a disgusting narrative that's being pushed. And I think we talked about it the last time in Symposium Sunday. But basically, this is going to be a narrative that we're going to see more and more to push pro S, okay, which we know SEC is, I think it's fair to say they're corrupt. And it corrupt at least in the way that they're not being fair and honest about the way they're applying, case law regulations, things like that. In fact, they just dropped the case against Ripple this week. So, I mean, that kind of goes to show you who these people are. I mean, this is still a company man, even though he's former SEC and he's a senior lecturing fellow now at Duke University of Law. He still is upholding to the disgusting narratives that are, at a minimum, intellectually dishonest, but I would just call them straight lies. And, it's just, this is what crypto is up against. So be careful for these narratives, because a couple weeks ago we were talking about, the narrative of cartels and fentanyl with crypto, and, Sinaloa cartel is on the website, which is funny because we showed it last time, where this isn't traceable, but yet they have the wallet address, the Ethereum address for one of the main dudes that's on the run from US DOJ in Sinaloa cartel. So it's
Actually,
like, what's that?
sorry, let me cut over. Sorry. A funny point to what you're talking about, DOJ, they're investigating these people. If you go to this man's personal website that he has his information on, he actually was an instructor for the FBI. So an instructor at Quantico for the FBI, who used to be the chief for the key enforcement division for the SEC, is teaching these FBI agents these ideas like crypto's untraceable.
That's wild. Yep, there he is. 10 years as a guest instructor teaching as an annual law enforcement and technology in-service lecturer at the FBI Academy. Yeah, so they're getting fed with these bullshit lies too. You know what I mean? Because they're not very smart. They're just told, they just learn whatever they learn. You think they're going to be listening to Symposium Sunday or doing research on crypto? No. They're just like, this guy's the expert. He's the lecturer. Might as well, he obviously knows what he's talking about. And they just adopt these narratives. So then you get this pushback. It's a lot of times, I think, it's fair to say, like, these, especially FBI agents and other, law enforcement, they're just uninformed, and they think they're informed because they get people like this that's fucking coming to tell them stuff that, like, not true. Here's all my scholarly articles. And again, this is so intellectually dishonest. Explains how Hamas and other organizations evolved and transmogrify, changing their crypto financing techniques to evade capture. Dude, whatever, man. Wow. What say you to this? You know what I mean? It's, come on, dude. So, I mean, this is what crypto is up against. I don't think it's going to have a leg to stand on in the long run, because we already see SEC and Co. are getting wrecked in their current cases that they have in crypto. So
now, an interesting thing that could be applied is, like situations, like laws have to be enforced in like manners. You can't hold one person to a standard or one company to a standard with a law and not another. And as he points out with FinCEN investigations, kind of puts them up on a pedestal and everything. The leaked FinCEN files, there were trillions of dollars from traditional institutions that funneled into terror organizations, and they actually refused to comply with the government and regulation, and nothing ended up happening to them. And these are companies like PNG, Melon, PNY Melon. There's the 5 big ones. They just refused to comply. Nothing ended up happening to them. But the moment a few $1 billion trickles through crypto into one of these organizations, we got to crack down on them.
It's this weird thing, and I think it's mostly with boomers, dude. I'm realizing how much in the last week or two I don't like boomers. It's a weird thing that's happening, but mostly with these boomers that don't understand the technology and stuff, they just immediately discount things they don't like, and they just try to find everything wrong with it. And so I think a lot of that eventually is probably going to die out because the younger generations are the ones that are in control, not right now in the government or in Congress, but I think we're going to start moving in there. We're going to get a lot of these John Reed Stark people out of the government and hopefully out of a law school, because his arguments are rough, dude. Wrong. Like, geez, Louise, dude, go get a better job. Yeah, but these people will be replaced. The narrative will die out. It's a lie anyway. You know what I mean? It's intellectually dishonest. So we just got to wait it out. But, I think the most important takeaway is if you understand crypto, you understand the future of blockchain technology and what's possible, a lot of these news cycles, they come out and people aren't ready for them. I mean, a perfect one was, I don't even know how long ago it was, at least probably 5-6 years ago, was when Jamie Dimon at Chase was talking about how, Bitcoin's worth nothing, crypto's going to go to zero. And then he changed his tune later on, and they're like, yeah, you got to take these investments as, individually. You can't lump them all in. Yeah, because you know what we call that? We call that a generalization fallacy. Thanks for admitting that you were intellectually dishonest and not being logical. It's the same thing with this type of a situation. So, point is, we're front running the narrative. We see this narrative developing. Might get some steam, probably will, in my view. I don't know what you think, O'Breezy, but just be cognizant that if you see this narrative develop, just don't be susceptible to the FUD when it pops up and it's like the US government and FBI are shutting down crypto for good. Here's why. Hamas is murdering. Look at this. It's so ridiculous. Hamas is murdering babies, kidnapping innocent people, and raping women and girls, committing unspeakable and unfathomable acts of terror. And crypto is helping them do it. Definitely not TradFi, though. No way. Ain't no way TradFi has a hand in that as well. It's just, So, anyway, what do you think is happening with this narrative, O'Breezy? Do you think it's going to develop and continue to get more intense, or you think these idiots are just going to die off?
I think it's going to get more intense. My personal perspective is we are probably heading into an extended period for the next few years of global turmoil and everything. So there's going to be a lot more scary things happening on the news, whether domestically or abroad. And we have an election cycle coming up. So these are hot button issues.
Yeah, true about the election cycle. I for some reason, keep forgetting about that. So, but anyway, I think that's pretty much it from us, Christine, for FA Friday stuff.
Thank you, gentlemen. Great to hear your discussion every week. And I'll hand it over to G-Force now for Stock and Legacy Market Saturday.
Okay, thank you, Christine. Just to follow up with O'Breezy and Pepe, I read a study actually in a newspaper 8 years ago, maybe it was 9 years ago, that on $100 bills, 90% of the $100 bills had traces of cocaine on them. So the government's not going to stop printing $100 bills because cocaine cartels and other cartels and mafia are using it to pay, for cocaine and pay for their illicit services. And crypto's the same way. So I would say, hey, okay, quit printing $100 bills and we'll quit printing crypto. That's just my opinion. It's funny how everything circles back around because that was 8 to 9 years ago. All right, getting to legacy markets, S&P 500. A lot went on this past week. You'll see that Friday was pretty much a down day, quite a bit, significantly down, and it stopped right at the 2x standard deviation line on that 2x Bollinger Band. So we'll go backwards here. On Thursday, you'll see that this was when Fed Chairman Powell was speaking, and on cue, as he started to speak, the markets just tanked. They went down significantly, and it just hasn't come back since on Friday. So if you look at this, you'll look at back here in the first part of October. This is actually an information. You see where it goes up here. This is the first part of the M. Here's the middle line or the midpoint of the M. And then there's a second high here. So again, you'll look at this and you'll see that the second high is not as high as the first, on the M, which means things are going to tank. What was confirmation on it was this midpoint right here got broken on Wednesday. So that midpoint, once it broke, even though it did support around the black standard deviation line, it broke that midpoint. So you'll see that it just tanked ever since. That to me is the key. Once it's on a M formation, or even a W formation is a bullish formation, the M, as you can see here, is a bearish formation. Once it breaks that midpoint, okay, then you're looking at a downhill slide, which it did on Thursday, then it did again on Friday. So another bearish thing is that this Friday close also broke these lows right here. Okay, all three of these. Okay, so again, I expect more of a downward slide. We'll see a few maybe green days, maybe a couple green days, but they won't be significant. And again, it's the month of October. October is notoriously not too kind to the markets. I'm going to switch over to the dollar index at DXY. We'll look at that. There's a few things going on here as well. So in the past, you'll see that we've had, new high, the fourth new high, but now we've come back down to the standard deviation line, and it's popped up from there, okay, to this point. But is this point a new high? No, it's not. The last new high was over here on October 3rd. So now we're starting to trickle down, and we're not getting so many new highs. So I'm looking at this and thinking, okay, it's probably going to go down. And this could also be a reason why crypto is going up. I mean, a lot of people say there's a reverse correlation between the dollar index and crypto. There is. I mean, I've looked at it for months now, and I'm starting to become a believer and thinking there is a correlation. It's not an exact correlation or an exact inverse correlation, but there is a correlation. But that's the end of the dollar index. All right, that's it for me, and I'll hand it back over to Christine.
Thank you, GeForce. And that's it for this week. Remember, as a member of DeFi-Logic, you can review the Daily Dose Forum, where we publish analysis on various research topics. Also, DeFi-Logic members interested in alpha testing our ETH spot trading indicator and new XRP strategy developed by Cryptix. The service is free until we launch. Also, DeFi-Logic is a freemium service for members that join prior to public launch. As an early member, you'll gain the free lifetime access to the server and steep discounts on other products and services we develop in the future. Thanks for joining, and we'll see you at 1 p.m. Mountain Time next week. GN friends.
Join us next week in Discord for Symposium Sunday at DeFiLogic.com.